Consul General for the official opening address for this event. Madam la Consul General, please.
Thank you, Moses. Mrs. Secretary General, dear Tosan, dear board members of the Franco-Nigerian Chamber of Commerce and Industries, representatives of the Lagos states, trade agencies, members of the Nigerian-French community, distinguished guests, ladies and gentlemen. First of all, I want to wish you all a Happy New Year as we welcome you to this first event of the Franco-Nigerian Chamber of Commerce and Industry for 2022. And we are glad to hear that you have a very interesting program for the year coming ahead. And I'm very glad to see that events are resuming again, because this is really what it's all about for the Franco-Nigerian Chamber of Commerce to have this kind of events. It aims, the event today, at informing the Franco-Nigerian French business community to inform the community on key happenings in the Nigerian economy. Even if we know that when it comes to economics, forecasting is not an easy task. With the effect of the pandemic gradually phasing off, we have seen economic recoveries both in Africa and globally. As you know, Nigeria recorded a GDP growth rate of above 4% in the third quarter of 2021, which is a very positive and encouraging sign, as most sectors of the economy have proved resilient. 2022 seems to look promising, as the World Bank and the IMF have predicted a 2.5 growth rate for Nigeria. Indeed, Nigeria seems to be positioning itself for a solid and sustainable growth. Economic actors have taken steps in the right direction with the adoption of the Petroleum Industry Bill in 2021, but also the adoption of the Finance Act, upon which we will get a clearer insight later on. The adoption in good time of the 2022 budget and the implementation of various infrastructure projects across the country. On our side, French companies keep seeing Nigeria as a viable investment destination. Our foreign direct investment stock has doubled over the last 10 years, and Nigeria now accounts for 60% of French FDI in West Africa and 17% on the continent. When it comes to our bilateral trade, indicators show good signs also. Our trade exchanges rose by nearly 20% in 2021, of course, after the sanitary crisis. Nigeria has been France's leading trading partner in sub-Saharan Africa, and Nigeria ranks fourth in our foreign trade with the African continent, behind Morocco, Algeria, and Tunisia. But beyond traditional sectors such as oil and gas, it is interesting to note also that our trade relation has become more diverse, with a rising trend in agriculture, ICT, e-commerce, and media. And last but not least, we had bilateral visits also and meetings which helped strengthen ties between France and Nigeria, with the visit last year of Minister Franck Riester, who is Minister Delegate for Foreign Trade and Economic Attractiveness. We also had meeting of key business figures with President Macron, and last fall, we also had a strong Nigerian presence at events which were held in France. Whether it was Ambition Africa, we also had BPI, Inno Generation event, and of course, the new Africa-France Summit. So we are confident that these are good signs for the further strengthening of our business relations in 2022. So once again, welcome to this session, which I trust will be very informative to everyone. And many thanks again to the Chamber for putting this event together in partnership with ALEX, who is always a strong partner. Thank you.
We'll go straight to our discussion this morning, where we talked about the Nigerian 2022 economy, dissecting every aspect of the economy. We understand that the key economic issues to watch in 2022 includes activities following a pre-election year. Just last week, Mr. Taiwo, the federal government has decided not to remove subsidy on petroleum. And of course, we have a supplementary budget of over 3 trillion now. What implication does that have on the economy? Issues around the foreign exchange rate. The Central Bank of Nigeria has just announced a new policy around price controls for importation of items using 2.5% as the benchmark and using price verification as the basis for that. So these are things that we want to know because a lot of businesses that are here today are being affected. Their Papa Port issues of logistics and the rest of them. In the light of all of this that affects businesses, CBN foreign exchange policies, what should businesses do? We understand that between now and next year election, the policies are just going to be very, very temporal policies that will favor re-electing the incumbent. That is how it's going to be. We know that already. But of course, businesses are not going to go after a new government comes into power. So what we are looking at today is what should business do in the light of all this volatility of policies. I'm going to put it that way. And of course, the Finance Act, Mr. Theophilus Emuwa, we're going to look at that. We understand that the federal government has introduced 10 naira for carbonated drinks, introduced new tax for educational tax, 10% tax for investing in the capital market of 100 million and above. So what implication does this have for businesses? Is it a revenue drive of government or is it to support businesses at the end of the day? So these are things we want to talk about. We want to get straight to those issues and see how we can be able to advise the businesses in this room on what to do in the light of all these things that are happening as far as the Nigerian economy is concerned. Like Council General has mentioned, France is still interested in Nigeria. Infrastructural developments are there. We're not going to look at the bad side alone. The good side is also there to create a balance at the end of the day. But looking at the budget, 2022 budget, 17 trillion naira and a deficit of over 6.9 trillion naira. Where are we going to get the deficit from? So without much ado, ladies and gentlemen, I want to introduce the fiscal policy partner and then tax leader of PwC.
Good morning, everyone. It's my pleasure to be here. Thanks to the Franco-Nigerian Chambers of Commerce for inviting me and for Alex as well. Look at the Nigerian economy in 2021, just to set the context, because you need to know where you're coming from so you can have clarity about where you're going. And then we look at the events that shaped 2021, and then what I consider to be expectations for 2022 and my final thoughts. Now, the interesting thing about economics is there's a lot of aggregation and averages, right? So we'll tell you inflation ended at 15.63, unemployment was 33%, but that really actually may not mean anything to anyone because everyone has their own economies and it's personal, right? What do I mean by that? About 60% of Nigerian households spend between 80 to 120% of their household income on food. Those who spend more than 100% actually borrow to feed, right? They have no hope where to pay back from, but they just have to survive one day after the other. To them, the inflation is not 15.63. It is the food inflation and it's more than 20%. To many families and households, they have one breadwinner who lost their job. Unemployment for them is not 33%, it is 100%. And the same thing impacts on businesses. We said Nigeria recovered quickly from recession, but there's so many sectors that continued in recession. We need to always bear this in mind because again, particularly for policymakers, it affects how you introduce policies Otherwise, you make mistakes. Something I'm still trying to get my head around is the new tax that was imposed in the Finance Act, and I'll allow my brother to speak to Finance Act. But they included aviation as one of the sectors that should pay the tax. And I say, how on earth, which data were they looking at that the rest of us cannot see? From the monetary policy point of view, we know the central bank has always been very active. Many of us think they are doing too many things. I listened to the former deputy governor of central bank recently who said maybe we should just say it's the Central Bank of Agriculture because they do agriculture as well. And the point that Moses made about price control, 2.5%, this is also where we have the conflict or lack of coordination between monetary and fiscal authorities. What the CBN is actually trying to do is the role of the fiscal authorities. It's called transfer pricing, right? The CBN has no knowledge and capacity to determine what price is right. That's not their duty. But of course, we see them doing a lot of that. Multiple exchange rates continues. We saw that certain things around BDC should not sell FX and so on and so forth around fiscal policies was essentially influenced by COVID-19 still, and then the economic sustainability plan of the federal government of Nigeria. And we saw even attempts by the lawmakers to introduce what they call the tertiary healthcare fund bill. They said we have to fund healthcare in Nigeria. That's so important. And it's just so easy that they wanted the private sector to pay for that. We had the expiration of waivers, especially as it affects capital market. If you're here and you're looking to raise bonds to finance your activities, the cost of that has just gone up by almost 40%. Because as of the 2nd of January this year, the waiver on corporate bond expired and it wasn't extended. It was a waiver that was granted in 2012 for 10 years. So what that means is a bank, for example, that invests in the corporate bond, in corporate bond, will have to now pay corporate income tax, that's 30%. They will pay education tax, that has just gone up to 2.5%, but on a larger base. On a larger base. The base for calculating education tax as of 2020 for all Nigerian companies that filed returns and paid was 13 trillion naira. The base for calculating company income tax for all the companies that filed returns and paid was about 5 trillion. So the base for education tax can be twice as much as that of corporate tax. So in other words, 2.5% equates to about 5%. Add it on top of 30, it gives you 35. Whatever balance is left, when you give it to your shareholders, ultimately, you pay withholding tax on it. So that's 10% of 65% is 6.5. Add it to 35 is 41.5%. That's how I came up with my cost of we move from 0% to about 41.5%. So it would affect your ability to finance your business. The other highlights we have include the fact that insecurity continues, sadly. And then we continue to hear about fiscal federalism, more power to the state. And I was having a session, I think it was last week, for the Nigerian Economic Summit Group in Abuja. They were looking at outlook for 2022. And one speaker of one of the states of assembly in Nigeria said, well, don't you think that we should give more powers to the state? I said, yeah, maybe in principle. But how about we start with what you have now, right? Because I know that the biggest resource other than human capital that any country would boast of is land. That is in the hand of states in Nigeria. Even in the US, states don't own up to 10% of land. That's the most convoluted, most mismanaged resource. Start with that and see the magic that will happen, right? So optimize. Now, quickly, the event that shaped 2021, not very different from the outlook and the overview we've looked at. Of course, you have to always remember the budget. And this was actually the original one that was signed. There was a supplementary budget of almost 1 trillion. So eventually, it was more than this. Major issues include COVID crossover again. to 2021, and also it has crossed over to 2022. We continue to see disruptions and uncertainties. Of course, we should remember the Finance Act of 2020 influenced events of 2021, including issues around unclaimed dividend fund. That was a major topic. I think Nigerians have forgotten about it now. We had issues around, auto policy, and so on and so forth. The budget, like I said, and the attempt by government every year to want to sell some public assets unsuccessfully, monetary policy, taxes, especially the VAT controversy was a major one. I was surprised that the FRS still managed to collect over 2 trillion from VAT, because that certainly must have impacted on their ability to collect. Industrial actions, insecurity, the great resignation. This is something we didn't used to have before. As they are not resigning greatly in Nigeria, but because there is great resignation elsewhere, they're looking for people to hire, and then they target Nigerians. So more than 60% of resignation in my firm have been people relocating to the UK and Canada to take up employment. In fact, they've gone so sophisticated now that they can hire people, keep them in Nigeria, pay them in US dollars without having to travel abroad. And some of those guys earn as high as $4,500 per month. Plus, they need to account for their PAYE, which I know they will not account for, so they'll keep the gross. How do you compete with them when you have to comply with PAYE? We continue to see migration as a result of that. And I like to also point to the fact that it's not only individuals that are migrating, corporates are migrating. We're saying that, Nigerians, we create a lot of unicorns. I say, yes, Mandela is supposed to be a Nigerian company. Google it. It will tell you that it's headquartered in New York, and it has campuses in Africa, including Nigeria. So we had AFCFTA took effect, at least on paper. We are still trying to figure out what it means for all of us. What are the expectations for 2022? Because I know I have now just 3 minutes left. I've decided to call these the Big Five. To be honest, the only reason why I just talked about the Big Five is because of the animals, right? I think these Big Five issues would shape 2022, and it should help you to plan and start thinking about what to do. They said it's death, right? Death in terms of dying. So by the time we're not going to die, we'll still be alive, but we have to deal with borrowing. So for me, it's debts and taxes, right? Government needs to finance the budget deficit. Originally, it was about 6.3. The lawmakers, in their wisdom, added to it. There's this wrong understanding in Nigeria that when you adjust the benchmark price of crude oil per barrel, you make more money. You actually make no more money, right? It doesn't change the outturn. If we estimated the barrel of crude oil to be $0 versus $100, our revenue for the year will be what it will be. It only changes your expectation and therefore how you spend or misspend the money that you have not even generated. So they adjusted the benchmark price, and then they adjusted the expenses, and boah, everything went up. So we now have to look for about 7 trillion. Like Moses said, if you look at the borrowing plan of the federal government, it's not even up to 7 trillion. Now we have to add 3 trillion to it. That takes us to easily 10 trillion naira, ladies and gentlemen. Now, the plans for borrowing is not up to that. And what that says to me is government is likely to print more money to spend. When government prints money to spend, it is inflation tax, because the money you hold in your hand has less value previously, subsequently than it had previously. Of course, Finance Act would influence that. My brother will speak to that. Nigerians continue to pay more taxes, not only the ones introduced by government, but informal and implicit taxes. Informal and implicit taxes in Nigeria are very high, extremely high. Informal, of course, when you pay taxes to non-state actors. We've seen the numbers of the transporters in Lagos. They run into billions, hundreds of billions in a year. Implicit taxes are those taxes you pay when you have to take care of what government should ordinarily be taking care of. And we do that every single day. So our tax rates effectively very high. Number two is politics over policy. Even when we were not doing a lot of politics, we didn't have time for policies. You can only begin to imagine what 2022 will look like. It's the campaign year. So for this year, priority for everything, even policies, will be politics. So government will tell us what they want to do, but underneath will be consideration about politics. So that will have an impact. So not a lot will be based on data and evidence, but sentiments. Number three is COVID-19. Still hasn't disappeared. But I'm happy that we're beginning to see a trend, I think led by the UK. They say, you know what, let's just relax everything. You know, before, a lot of decisions around COVID were not made based on science. They were made based on politics, emotions, and trying to demonstrate that we are doing something. We, in this context, mean politicians. Now they've realized the impact on the economy is damaging. So by letting loose and relaxing, what you do is you attract economic resources towards you, right? It means it's easier for me now to go to London than it is to go to Germany, for example, right? So what's going to happen is other countries will start relaxing theirs as well because they don't want to lose the economic advantage. Maybe this is signaling the end of the restrictions and uncertainties around COVID-19. Plus, I'm positive that we're getting closer to the herd immunity where we won't have to worry a lot. We just treat it like it was flu and we move on with our lives. Number four of my big five is insecurity. Sadly, this is likely to remain and continue to be a big issue for us, and it may further be complicated by politicians during this pre-election year, because for them, it's easy targets to find people who are hungry, food insecurity, who are also unemployed. When you combine hunger plus lack of hope, nothing else makes sense. Those are people you can recruit easily to do almost anything. So insecurity, unfortunately, is likely to persist. And lastly, the elephant in the room. I think this elephant, we actually talk about it, we just don't do anything about it. Now, this subsidy is not affordable, and we don't need to convince anyone. It's so obvious and visible to everyone. But it creates market distortions. We can't invest. We can't create power. We can't create electricity. We can't create economic activities. We can't generate effects. The largest demand and the pressure on foreign exchange in Nigeria is petrol and fuel products. Ironically, it's our number one export. Ironically, it's our number one import. Almost 40% of our scarce foreign exchange is going into importing fuel. It is sad and painful that half of it is not coming to Nigerians. It's phantom, right? Because at the height of the pandemic, not the restrictions, when the price at the pump was about the same price as the market price, there was no incentive to smuggle it. Our consumption was 30 million liters per day. Fast forward, it's now over 60 million. What did we do in 1 year to double our consumption? So it's going across the border. So we are funding and financing criminals, hundreds of billions every month. Now, the other part of it, the other half, is enjoyed, to my estimation, about 80% of it by the elite and the middle class. The poor people actually get less than 10% of this massive amount today. I do think that the implication and the impact of subsidy removal is exaggerated. Because you can go back in time and look at data, right? We've adjusted this price sometimes by almost 100% before. Nigeria's consumption GDP is about 136 trillion naira. You know what it means to me, right? Is that if you had removed subsidy as of 2021, you're asking Nigerians to pay an extra about 1 trillion naira. On top of their consumption of 136 trillion, 1 trillion divided by 136 trillion is less than 75 basis points. You can go back in history, right? The impact of inflation is not as huge as Nigerians fear. The problem is every single time government had decided to remove or attempted to remove a subsidy, you know what happened? They create scarcity. So the rise in inflation and everything is not because of the price remover, it is because of the scarcity. If you can't get petrol to buy and you buy by the roadside 1,000 naira per liter, everything will go up. So I think that government is doing a bad job, a poor job of trying to explain this to Nigerians so they can win more people to their side. Labor is there. We don't know who they are fighting for, but don't rule out vested interests. The fact that your voice is the loudest in the room does not mean that it is representative. To close, my final thoughts is just this slide. And it's to say we can see all of this. Usually when they ask me to speak about the economy, it's difficult to find good news, right? But you have to be honest and say things as they are. So I thought this might be a good way to find some good news. If you can't see it in the past, maybe it's in the future. These two gentle people were discussing. And the guy to the left said, good or bad economy, one day we will all die. The friend said, true, I agree. But on all the other days, we will not. So which means it is still worth living. Martin Luther King Jr. says we must accept final disappointment, but we must never lose infinite hope. So as stakeholders, while we are mindful of these challenges, we should be open to opportunities, because there lies what you're looking for. Thank you very much for the opportunity.
Permit me to rely on existing protocol. Taiwo has nicely set out the background for this 2022. He has pointed out that the government seems to have a deficit between what it plans to spend and what it expects to receive. That tells you that they will be looking for money wherever they can find it. And one of the places where they will be expected to find money is collecting taxes from you and I. In the new the Finance Act 2021, there are three main themes which you will find. The government has tried to plug leakages in various provisions, and also become more proactive in collecting. There are many things which they should have been collecting, which they were not collecting. Now that they need more money, they're beginning to look at the laws properly and spot things which they missed before, and I'll come to that. Then there are a few new taxes. Some may say not so significant, but we will talk about those. And then there are a few things which they thought they should clarify where there was ambiguity. The leakages and getting more efficient in collection, one of the things to bear in mind is that your bank is obliged to provide to the tax authority your names and addresses, all of you. In other words, you cannot hide. So every quarter, the bank is meant to send to the tax authorities information about the customers it has. And of course, you know that there's BVN. So with BVN, they can cross-reference and see all your activities across different bank accounts. And so increasingly, they can see what your financial activities come to, and they can, assess you. You may remember that a few years ago, the FIRS actually did something like that. They plugged into the banking system, and they could estimate which customers had turnovers of 5 billion, 10 billion, and they were then asking the banks, the respective banks, to block those accounts until the customer came to see the FIRS. I don't know if any of you in this room had that experience, but that was what they were able to do in order to, because they had this possibility. VAT by non-resident suppliers. That's been an ongoing discussion. Over the last, there was Finance Act 2019, 2020, now in 2021, they've tried to, bring all of it into the law. Before now, if you were a non-resident supplier, you were only taxable if you had some physical presence here. Now they've recognized that there's a lot of digital activity, and they're saying we will catch that. And so we want you to do two things. First of all, you register, and then you collect VAT on those transactions and you remit to us. Then there's capital allowance. Before now, if you had a business that included some tax-exempt revenues, so if half of your income was tax-exempt and half was taxable, you could still deduct your depreciation for the whole business from the taxable side. And the taxman says, this is not fair. If half of your income is from tax-exempt businesses, then let's apportion. Deduct only half of those of that depreciation from the taxable side. It's not right to take everything from this side. You're denying me some tax. So again, it's the sort of loophole they're plugging. There are incentives for gas utilization, and before now, it was possible to sort of claim under different headings, and some people did that. What the taxman is saying is we will not allow that anymore. If you've enjoyed it under one heading, we will watch and see if you try to enjoy it again under another. We will not allow that. So if a company has enjoyed it and gets acquired by another company and you want to start the clock again, they will say no. Deployment of technology. I talked about this earlier, that the banks now have to provide data to the taxman. The taxman in turn has access to the banking system. But with regard to retailers, many don't realize that the taxman also plugs in to the accounting system of Spar, ShopRite, and the other retailers. And so the taxman is seeing real time what business they're doing. At the end of the month, the taxman can say, well, your VAT for this month was X. So there's no room for argument. And the taxman doesn't have to wait for a return to be filed. It's all in real time. The taxman knows that this was the business. By the date next month when you should remit the money, he's expecting the check or the wire transfer. FR supremacy. Before now, it was not uncommon for different agencies to come and audit you. So today it might be EFCC, another day it's somebody else checking the same things. And after a while you start wondering what's going on. The Finance Act has now said that FRS has supremacy. FRS should be the clearinghouse. So all these agencies should simply feed their activity through the FRS. So you should only be dealing with one agency. Of course, the issue of the National Assembly is not covered, and some of you may have had that experience where you get an invitation from the National Assembly to come and explain various transactions, and they sometimes insist that they must see the CEO, and you have to go up there and they're asking about tax or customs duty that you paid several years back, and they want the paperwork. That is not addressed by this Finance Act. So, unfortunately, that may still be a problem. New taxes. One of the big ones is capital gains tax on the sale of shares. Now, this is for sales where the volume is over 100 million, where you do not reinvest the proceeds within a year, and where it is not tied to a securities lending transaction. Now, many people think that it's the capital market only that's impacted by this new provision. But the way it's written, it impacts anybody who's buying or selling a company, whether a public company or a private company. And with regard to private companies, if you have a PE fund acquiring a company, then this provision kicks in. And you'll find that in many cases, when such a company is being bought, it's being managed for 10 years or more by the founder. So the price at which he started it is probably a small fraction of the price at which he is selling today. So 10% of the gain is almost like 10% of the value. So if you're in that world, this is what to, you need to pay attention to this. And of course, in addition, those who are in that sphere are having to pay the competition regulator, FCCPC, something of the order of 0.35%. So if you're doing a $100 million transaction, you pay the FCCPC $350,000, then the seller is going to be looking for anything between $5 and $10 million as capital gains to pay to the tax authority. So it is not an insignificant development. The flip side is when you buy from many small shareholders, they are the ones making the gain and they should be filing returns. It's not clear how the taxman will collect from that multiplicity of shareholders. The taxman may insist that the money should be paid, deducted at source and paid by the buyer, but that's something that over time we will find out what the landing is. But it's a big issue. In most countries, there's tax on shares, on capital gains on shares. We had this exemption from the 1990s because they were trying to encourage and stimulate the capital market. So we can't complain too much that it's something unreasonable, but it's a change that will have a significant impact on quite a few things. We talked about digital services by non-resident companies. What the law is now saying is that irrespective of them having a physical presence in Nigeria, from now on, they are liable to tax in Nigeria. Now, where the taxman doesn't have data on your business, or he hasn't received accounts from you, the pre-existing law allowed him to assess you on a deemed profit basis. And 20% was the rule of thumb, or is the rule of thumb. And that's what can be used for in these situations where you have non-resident businesses selling into Nigeria. So 20% of that turnover will be taken as your profit, and then the rate of tax is 30, so essentially 6% of turnover. Is it a new tax? The government says it's not a new tax, it's just an expansion or redefinition of existing. We need to remember that the OECD two-pillar solution, Nigeria is one of those few countries that has not signed on to it. And so they're not bound by those provisions or restrictions. Of course, if you have a double tax agreement, which France does have with Nigeria, then that should save companies whose residence is France from this provision. Providing cloud services, online retailers, online movies, Amazon, Netflix, people like that. They have to think about that. Another big change is the excise duty on non-alcoholic, carbonated, sweetened beverages. It's 10 naira per liter, which means that if you're buying a small bottle, which is half a liter, it's an extra 5 naira. So if it's currently 100 naira, it'll go up to 105. The impact of that only time will tell, but it's certainly the manufacturers will feel some drop in their, in market demand. Now, the question is, how will the tax collector, in this case, it's the Customs and Excise Department, determine that what you're producing qualifies? You see, if you've not added sugar to the beverage, does it qualify? It's one of those things where the taxman is not a scientist. How does he tell that this product meets these requirements? Does he go to NAFDAC? It reminds me of an experience we had a few years ago. A client was selling fresh frozen chicken, and the taxman said, well, basic foodstuffs are exempted from VAT, but this does not qualify. And we had back and forth with the tax office in Lagos. They didn't agree. We eventually set up a meeting with the tax office, with the headquarters in Abuja. And we showed up with a real frozen chicken so that they could see what we're talking about. It's not smoked, it's not salted, it's not seasoned, nothing. It's just fresh, but it's wrapped. I mean, we can't sell in a supermarket chicken without wrapping. If you go to the open market, yes, you can buy chicken, they just cut it up and throw it at you. That's fine, but the supermarket cannot do that. And so when they saw this, they agreed that, oh, okay, now we hear what you're saying, we understand, it's exempted. And we came back to Lagos. but it took that sort of effort to convince them. The people in Lagos, FRS, refused to agree. We had to go upstairs. So this looks like one of those things where they will say, well, yes, you say this is orange juice, but it's sweet. And you say, well, you didn't add sugar to it, it's just naturally sweet. And say, well, I don't care, pay the 10 naira. And you'll have to go, upstairs to resolve it. Education tax has gone up to 2.5 from 2%. Taiwo mentioned that. Another interesting one is educational institutions. Now, there's a provision which explicitly exempted those from tax. That provision has been deleted, but I understand from comments from tax authorities that the intention is not to disallow the exemption. And I'm saying, if that was not the intention, why did you need to make the change? So only time will tell which way they go. If they insist on the literal, what has been written, then we do have a problem. Well, we all have a problem here. If you're running a school or any type of educational institution, you have this to think about. Clarifying provisions which have made a few things clearer. Withholding tax on unit trust, the interest on that, the withholding tax on interest used to be taxable more than once. Now they've clarified that there should be only one point of taxation, and after that it's tax-free. VAT on invoicing, small companies are exempted, but if you're an oil and gas company, before you reach production, you have high turnover, but zero profit. And what they're saying is, even at that stage, we want you to be doing VAT invoicing because we don't want that spare of companies to escape our radar. And Aseni levy, it's now clarified that it's 0.25 of profit before tax, not turnover. Minimum tax provisions, that has existed. It's a challenge for companies that have high turnover and low profit, because what it's saying is that you'll be taxed on your turnover regardless of profit. And for many businesses that are in perhaps infrastructure where you start with a big expenditure, but you don't make profit for quite a while, it's a challenge for them. It's not, there's no easing here. It's going to continue to be a battle, and we'll see how that plays out. We have some disputes in court on behalf of some clients in this respect. Profits from exports, those are exempted, but again, not if it's from the oil and gas sector. Insurance companies, there's some, redefinition, essentially about what in the banking you might call Tier 1, Tier 2 capital, but it's not really a tax issue. Then some one or two miscellaneous things. Stamp duty audits. Now, stamp duty is not, there's no change in the Act of 2021, but there's been a change in the FRS's attitude to it. For many years, they weren't looking at that when they audited companies. Now they are, and many companies are in a bit of shock because they're going back and looking at agreements you signed, over the years, and they're saying, well, for this one, there should be 0.5%, for this one, there should be 0.25%, and it's not insignificant. And mind you, it applies to even intra-group agreements. So if you have an intra-group loan, that document is subject to stamp duty, though it's intra-group. And we don't have group taxation in Nigeria, so there's no saving, when you have transactions within a group. So you're exposed to this sort of thing. The rates are significant. They can sometimes be as much as 1%, as high as 1%. And like I said, if given an intra-group loan of $50 million, the rate is 0.3, 0.4, you're looking at a few $100,000 in stamp duty. And they're going back several years, as they are entitled to. Then there's a provision dealing with export processing zones. In the amended Finance Act, the provision is saying that if you don't import into Nigeria at all, you'll get your 100% tax exemption. But there has always been another provision in the Nigerian Export Processing Zones Act, which allows you to sell 25% into Nigeria and still get the tax exemption in full. It's not clear what the idea is, which should prevail. I mean, I think that the NEPTA one should prevail and probably has continued to prevail. But why they are making these other changes without remembering NEPTA, the NEPTA Act, is what is not so clear. But again, it's another area where there's going to be some debate, and it may involve disputes and litigation. I will close at that point, and we'll take.
I know that Mr. Oyedele, when he talked about PIA, he talked about the suspension of PIA, but it was majorly around subsidy. But I know that PIA, is a lot broader, right? It affects a lot of other things. So my question is do you see PIA as really being implementable? That's number one. I know that there are a number of things that have already happened. So we're talking about the timeline for transition. We've started seeing traction, but it appears that things are still being delayed, and I'm sort of concerned about the election year as well. Do we expect that PIA would achieve the desired traction? Should we be expecting to see FDI inflows? Because for a long time, we continue to say that the passage of the PIB is the reason why we're not seeing a lot of investments. So what do you think the outlook is for PIA, really? The second question is around the election. So, we've said a lot about the elections. I like the part where you said a lot of policies don't really change, regardless of the government, changing government and all of that. But I'm just wondering, we also know that election year in Nigeria, or pre-election year, is when there's a lot of money flowing around. So what sectors should we expect that there will be high growth in this year, right? And we also know the players that are positioning already. What should people look out for? When should we expect to see a change happen?
PIA, before it became a law, while it was PIB, was the uncertainty that it created. So people could not invest because they didn't know what was going to happen. And that went on for almost 2 decades, right? And then we managed to pass it, and we started creating the same uncertainties that we had when we didn't pass it. First, we said, we're sorry, we need to quickly amend it. And the lawmaker said, by the way, if the president wants to amend 2 or 3 sections, we too have other things we would like to amend. And then a few months later, you say, actually, subsidy, because we cannot remove it, let's suspend the PIA. To be honest, there's enough provisions in the PIA as it is for you to continue your subsidy if that's what you want. You don't need to suspend the PIA. The PIA recognizes that you have to incorporate NNPC Limited. It also recognizes the old NNPC Corporation, and it has no sunset for when NNPC Corporation has to stop to exist. NNPC Limited cannot carry subsidy, but NNPC Corporation can carry it. Leave the PIA alone. But by the time you start saying we are suspending it, you know what investors will say? Don't trust this law, even though it's been enacted. That is one that is most painful for me. I always say that there's really nothing wrong with government doing business, but everything wrong with government doing politics with business. We know Saudi Aramco, right? We know about Emirates. You can name global companies that are owned by countries, and they're running well. The difference is they focus on competence, not politics. The CEO of Emirates is British, right? Go to the board of Aramco and you see competent people running it. So because we play politics with business, things don't work. NNPC had 6 GMDs in 7 years. We just got into PIA now. In less than 1 year, there are 2 chairmen of the commission. In less than 1 year, we have started exactly the same. The name will change, the structure will change, but the people are the same, so how they behave remains the same. So we've started implementing the PIA, but I'm not impressed with it. Would that improve FDI? I don't think so. Investors are not moved by rhetorics. They get down to business. I advise a lot of multinationals and they're not asking questions. So I'm not seeing FDI. But I think that potentially the PIA can make a difference if we implement it properly. To your second point about pre-election year, money flows, where should we be looking at? You're right, money flows, but it's in large part, it's not legitimate money, right? But does it really matter if you sell rice? And because a lot of our people are very poor. So when politicians are giving this money to buy votes, a lot of them are poor people, they don't invest. When they collect money, they spend. So you expect that spending will go up this year, which is good for the economy. I'm not saying the source of the money is good, but the fact that people are spending is good. So you find a lot around fast-moving consumer goods. That's what they like to package and share to people. Technology is always a good bet, and financial services to a large extent. I wish that I could say that manufacturing is something I'm looking forward to, and industry generally, but it continues to be a challenge. Yeah, money will flow, and hopefully it stops at that. And nothing else that we don't want flows along with it. Thank you.